We've done it. We've reached the profit target on our 100k high stakes challenge, and we've done it in just 2 trades. If you're not familiar with the strategy, it might come as a surprise to you because we actually took 0 trades last month, so you might be a bit shocked to see how quickly things can turn around. I'm really excited to go over these trades with you, but first there's just one small thing I want to show you. Here's the small thing. Last week, my first child was born. I have a daughter now, and she stays up all night, which means we're going to be trading the Asian session together, doesn't it? Yeah. All right, that's just what I wanted to show you guys. Let's go take a look at these trades, shall we? Let's show them the trades. The first trade we took this month was this reversal on AU, which I think I gave it a 9 out of 10. A 9 out of 10, but the sole reason for this was because the break was on the smaller side. It could have been a little bit better. But the reason I was willing to set my order was because on AU I have a higher tolerance for smaller breaks, and we also had this large wick to the downside, which gave me a lot of confidence that price was going to reverse. The descending channel itself was pretty good. There's nothing really wrong with this. We were breaking and retracing the lows pretty much every time. We were either seeing weakness or an immediate retrace. Oh, wrong pair. And yeah, I was really happy to set my order after this small break. We even had a solid close. Now, the next candle continued, and I actually think I removed my order at this point. It's at 5 AM right here. And this is because it would have been an engulfing candle to the entry, which I would prefer to avoid. So I removed my order, and I planned on reapplying it after I saw the next candle. And the next candle was a retrace candle. It showed no shift, so I was happy to reset my order. I reapplied it right here, and we were tagged in at 7 AM. We then went on to break the high on the next candle. This was London open, so I was able to reduce my risk just underneath this bullish candle right here, and then I was tagged out. So I think this was a 0.79% reduced risk loss. But yeah, really happy with this trade. It's typical because we get tagged out right there, and then we continued up a little bit. If I drop down a time frame, you can see actually there was a super obvious liquidity area right here underneath this push up and underneath this push up. So you can see a very obvious, very clear sweep right here. So yeah, just thought I'd share that because I found it pretty interesting at the time. So here's the big trade of the month. This was a 10% winner that I took on NJ, and it helped us reach the profit target, but it actually didn't take us over the line. There was another trade which took us over the line, over the profit target, and I'll talk about that in just a moment. So this trade, I think I gave it a 10 out of 10. It might have been a 9 out of 10, I can't remember. This trade was nearly perfect, I'd say. Pretty much perfect. We have this larger ascending structure. We have this gap over here, which I kept in mind because it hadn't been filled yet. If you've done your focus charting, you'll know that gaps get filled like 80 to 90% of the time. So this was a pretty good confluence for taking this trade. Quite a rare one, but if you've looked into gaps, you'll know that they get filled often. And then we had this 3 candle break of the low, so we're seeing clear momentum, single candle pullback, which you can't really complain about, and then we had this really nice breaking candle to break the low. A few people might not have taken this trade just because of you might think this is a large wick. For me, NJ, JPY pairs are very wicky. I'd say this is more of a medium wick. It is on the border, but it's not going to stop me taking this trade when we're seeing so much momentum. Prior price action is great. And yeah, I think a couple of people took the trade and they were tagged in right there, but unfortunately a lot of people were actually tagged out on this candle right here. If I drop down to like maybe the 1 minute time frame, you can see it really clearly. Unfortunately, there was just like this big spike up right here. So we would have had our stop losses above this high, and NJ spreads can often go up to like 2 pips sometimes. So a lot of people were tagged out right there, unfortunately. And the reason I wasn't tagged out is because I actually trail my stop loss based on the pricing feeds in my MT5. So with IC markets, not the pricing feeds in TradingView. So my stop loss was actually like a little bit higher, which allowed me to just stay in this trade. So quite lucky. I would say that is quite lucky because this ended up being a 10% winner, whereas most people would have gotten out around break even. So NJ, it trends quite correctively, so I was able to just trail my stop loss all the way down. And then we had this flag here. I decided against taking this, I think, because of the slowdown and like the triple wicks. I wasn't super confident that it was going to continue. And then we got this huge candle to continue there. Now, there was actually an additional trade that I took. If I just bring it up right here, right there. So I'll hide the previous trade so you can see it a bit more clearly. Now, this was a scale-in, and I'm not sure if many people would have taken this independently. I think it's definitely worth taking as a scale-in. Independently, I think I probably would have taken it as well, to be honest. We've got it. This is a big move down. This is trending price action for me. And I'd say that the only reason you might not want to take this is maybe because of these wicks. Again, it's a very wicky pair. That's not really a big deal in my opinion. Another reason might be because the break is kind of small. But to be honest, with this pullback candles with the trend, so when you're on a downtrend, a candle which closes bearish, that's a big confluence for me. Like that really shows a lot of momentum in my opinion, and you can only get them when you have a wick like this because it fills the wick. And then we had the small break. The pullback candle kind of outweighed that small break for me. I think I gave this scale-in a 9 out of 10, and I honestly probably would have taken it independently as well. This ended up being a 3% winner, 2.9%. We had the slowdown here, we had the flag, which I didn't take, and then we were tagged out right there. Yeah, so both trades together, it was a 10% winner and a 2.9% winner, so it was 13% profit overall, which is just crazy. You can see how that recovered most of the drawdown we had, which was already minimal on the Fivers account. It was like maybe 2 or 3% drawdown, so that took us right to the profit target, which is it's only 8% on 5% accounts. So I think I didn't even let it run to full capacity because I closed it when we reached the profit target. But yeah, what an amazing trade. We'll go and have a look at the next one now. So the last trade we took this month was this flag on EJ. I think this set up around the same time as the flag we just saw on NJ. You know, the one with the slowdown. This one was a lot more high probability, so I was willing to take this one, but not the one on NJ. Yeah, this trade, it's great. The JPY pairs were really trending down. It goes against the fundamentals as far as I understand. I think the fundamentals are bullish for the JPY at the time of these trades, but it was trending down, and I don't really pay attention to fundamentals, and it worked out for me in that case. So this trade, my reasoning for it is that on EJ, we really like to get a channel and then a push down. We often get continuations from a move like this, and I'm seeing this as a channel. I'm seeing this as the move down, and then I'm seeing this very tight flag here. If I invert this, it might look a little bit better to some of you, especially if you consider this as more trending rather than a channel. We're even coming from a larger ascending over here. So, you know, even better, we've got this ascending, push down, little descending, and then a move down into a flag. This was the kind of reasoning for this trade, and this kind of price action is unbelievably high probability on the euro pairs. So this candle was during spread hours. On the open of, I think, Asian session, the candle which is no longer spread hours, I entered right here. We immediately moved down. You can see I have quite a small stop loss. It's 12 pips. I was quite confident with flags that where you're entering on the 11 p.m. open, so immediately after spread hours. So often we get a candle which just immediately moves, and in this case that's what we got. So I entered right there, and then I think I was tagged out right here, unfortunately. So it was literally, you can see it didn't actually hit my stop loss. I was tagged out by spreads, so I guess it was my turn to be tagged out by spreads, like the people that got tagged out on the NJ trade. We did move down, would have been in a little bit of profit here, and then we retraced to tag me out. Well, it would have tagged you out anyway. Now, interesting thing on this trade, on 5%ers challenges, there's actually a minimum number of profitable trading days. So although I'd reached the profit target, that counts for one of my 3 profitable trading days. A profitable trading day is a day where you've made more than 0.5% profit, I believe, which is about $500 on the high stakes account. Now, this EJ trade, I think I actually ended up closing it out on the Fivers account around here. So just before I got tagged out. I described this when I was giving the analysis, then I was describing it as how it would run out on a normal account. So my personal account, all my other accounts, this is how it played out. But on the Fivers account, I closed it around here because that was a $500 profit. So I was thinking, nice, this counts for my second out of 3 profitable trading days. Now, unfortunately, I closed it just a little bit early. I have my equity protector on Traders Connect. I have a good buffer on there, but I guess the market was moving kind of quickly because I just made $450 profit or something. So just shy of the 500 I needed. So yeah, that was a nuisance. We didn't quite get the second profitable trading day. Yeah, there you go. There's the 4th trade of the month. And in total this month, I think we made 13% profit, 12.3% profit with the reduced risk loss. And then this, it would have been a 1% loss. So we'll say about 11 or 12% profit for the month of April, which is fantastic. So we'll have a look at the Fivers dashboard now. We'll do a dashboard analysis. Here we are on the dashboard of our high stakes challenge. You can see that we've reached the profit target. We're still within the daily loss level and we've got 1 out of 3 profitable trading days. So you can see that described here. A profitable day is a day on which the closed positions made a positive profit of at least 0.5% of the initial balance. So the initial balance is 100K. 0.5% of that is $500. So we need to have 2 more days where we make $500. Now what I've done is I think I've reduced the risk slightly for my future trades, and I've set up a Traders Connect equity protector so that it closes out my trades as soon as they hit $500 profit. So I'm not going to be managing my positions as I normally would, trading the stop loss, all of that. I'm just going to close the trades when I hit $500 profit for a day, and then I'm going to turn off the copier for that day. Now we've got a little bit more data in here, we can actually have a proper look at the stats. So you can see I've taken 9 trades total. We've had 4 profitable trades, 5 losing trades, which is a 44% win rate. Now, I don't think that's super accurate because some of these trades are actually like the trades I took just to stay within the minimum trading days, just to stop the account from going inactive. So I don't think the win rate is super accurate. The profit factor, this would actually be, I think it would actually be a little bit higher because again, it's considering the micro lot trades I took. The biggest profit I made was $8,800. The biggest loss I had was a 1% loss, 1.1% because of spreads and things. My average profit, way bigger than my average loss. My average trade expectancy is $900. So on average, each trade I take is a $900 profit, which is great. To look at the trades here, there's actually, you'll notice there was a $500 loss here, which I haven't touched on AJ. This was a trade I took just to try and take us over the line. We'd made $400 from that EJ trade, so we hadn't quite reached the minimum profitable trading days. And I was like, right, let's see if I can do a cheeky little scalp here to take us over the line. And unfortunately, it ended up in a loss. I said, I'll accept going back to 500 because then I'm kind of back at break even. That was my mindset. You've got to do it sometimes. Like, I was $50 away from reaching the minimum profitable trading days and I wasn't willing to give that up. We're still above the profit target, which is fine. I'm just going to be trading normally now, except closing my trades a little bit early. So yeah, with this trade, I was thinking, can I just make $50 here, or $70 to be exact? And I set my stop loss at 500. So worst case scenario, I'm just back to where I started. That was my reasoning with that. So yeah, there you go. I hope you found this interesting. I hope you've learned a little bit, and I really appreciate you guys watching to the end. Make sure to comment this emoji to show me that you made it to the end. Turn on notifications so you're notified every time I release a video in this series. If you aren't already subscribed, make sure to subscribe. I'm going to be releasing videos like this every month, and other type of video every 2 weeks. So yeah, awesome. Thank you guys, and I'll see you soon. Bye-bye.